Hi, good morning everyone. You are listening to Kotak Securities weekly fundamental podcast. This is Rini Mehta. Indian stock markets were under pressure last week. Sensex and Nifty witnessed some correction during the week. BSE mid-cap and small-cap index too were lower, but they outperformed the larger indices. Indian stock markets grappled with domestic growth concerns, high global interest rates, and expectations of a muted third quarter result season. So, on the sectoral front, most indices ended the week with flat to negative returns. BSE IT index declined by around 2% ahead of the start of third quarter results this week, and IT industry is expected to face a tough first half of current year 2023. Now, if we look at the economy, GST collections for November, which are collected in December, stood at rupees 1,495 billion. Meanwhile, the correction in crude oil prices provided some respite, but the concerns with respect to global slowdown amid tightening of policy rates by central banks continue to weigh on investor sentiments. In addition to macro factors, the focus of equity markets over the next few weeks will be towards third quarter corporate earnings. Now, if we look at FPI, that is foreign investor flows, FIIs continue to be net sellers to the tune of rupees 7,813 crores so far in January month. FII flows are expected to remain volatile in the near term. FPI flows till date this month were negative for all emerging markets except for Philippines, South Korea and Thailand. On the other hand, India, Indonesia and Taiwan witnessed outflows. Now moving on to stock ideas. The first stock I'm going to talk about is newly added in our coverage. The stock is 5-star business finance. We have ad rating on the stock with fair value or target of rupees 700. So it's basically a star bond from South, guys. We believe 5-star smooth execution engine will deliver a high loan book CAGR of 30% in FY 23 to 25 in the highly profitable niche small business loan segment in India. Income vagaries of the below prime self-employed borrower segment drive high yields and early delinquencies for 5-star, though the company is able to curtail non-performing loans and eventual credit costs. So, we initiate with ad rating on the stock, so you can consider buying the stock. Lastly, our pick of the week is M&M with target or fair value of rupees 1,435. M&M and MVML, that is Mahindra Vehicle Manufacturers Limited, reported second quarter EBITDA of 25 billion rupees, which was 7% above our estimates due to better than expected gross margins. With the UV segment sustaining strong momentum with successful launches and RM tailwinds, we believe the company is well positioned to deliver strong EPS CAGR over the coming years. Consolidated ROEs, return on equities of the business, has crossed 20% in first half of financial year 23, led by the strong UV segment performance and turnaround of subsidiaries. So we retain buy on the stock. Guys, that's all for today. See you again next week. Thank you. Signing off.